Good morning, guys. Good evening. Good afternoon. How's everybody doing? Somebody give me a sound check. Let me see if we're waiting to go live. There we go. Oops. I'm gonna minimize, mute myself here. Hey. Okay. Everybody sees my screen. Oh man, I gotta mute all my screens now. Okay. Sorry. Hi, everybody. Somebody give me a sound check. Give me a screen check. Make sure you guys see me okay. Welcome to our FOMC trade. Very, very excited to be here with you. It's been a pretty roller coaster day, but really, I mean, just look at this monster day on NASDAQ, 2.4%, 1.4% in the S&P. Good or bad, we love movement, and movement is really what it's all about. So in chat, please let me know. You guys seeing me, hearing me? I see myself. I want to make sure that we are good to go. Type it out, guys. Give me some proof of life here. All right, a lot of people are joining in. Good morning, good morning, good morning. William, hi, how are you? See me and hear me. Where's everybody coming in from? Definitely a lot of Americans, because obviously this is mid-afternoon for us. Life is here. Okay. All right. Everybody's good. Who's coming to me from the other side of the world? Anybody from Asia here? Tony, how are you? Oh, that's good. You know, you're signing up with Apex. Very nice. Good to see you. Hi. Slovenia, not to be confused with Slovakia. Very nice. I'm actually going to Prague in a week and a half. So I'm not quite there, but I'll be close. What's LG? Singapore. Oh, Singapore is nice. Tanzania, Nigeria. Wow. Everybody's coming in from all over the world. Nice to see you guys. We have a very special session today. Let me just kind of lay out what's going to go today. So, you know, we have the announcement 2 o'clock, about 13 minutes. After that, it gets really, really quiet. So while we're quiet, I'm going to talk you through sort of a new approach. Definitely not a new strategy, but a new approach that I have to trading the markets, which is going to surprise a lot of you, I think, because it's sort of the exact opposite of the conventional wisdom of how people go into funding accounts. We can talk about anything else that's on your mind. We can talk macro. We can talk about lots of different things. Talk about the election, which seems to be turning around as we speak here right now. Talk about Venezuela. Talk about the Middle East. There's a lot of macro stuff that's going on. Bangkok, oh, that's nice. You have Lithuanian from Colombia. All right, very nice. Zambia. Oh my God, man, there's a lot of people from Africa. What time is it in Africa? Like, isn't Africa? Aren't you guys like way ahead of us? So it must be late. Is it late there? Is gold stretch here? Well, the big question is, where's Jerome gonna land today? 2,500, obviously big resist, right? Obviously big resist, but not if you're sort of thinking longer term, where gold is gonna start. If the dollar gets weaker, which I think is going to happen regardless of who's the president. That's the thing. The fiscal spend is going to be so much that it's definitely going to weaken the dollar. That absolutely puts upward pressure to gold. I mean, I think we're long term. We're long term bulls to 5,000, but from here to there, there's a lot of bumps in the road. So yeah, it's 2,500 resist right now, maybe, but I think in gold, like every other, like gold is like the new equities. At every dip a buy, right? What is it? I forgot. BTFD, buy the freaking dip. I forgot. Man, that was so long ago. I already forgot the name. All right, a couple of things I want to talk to you about before we start. Let me put this in here actually. So first of all, our friends from Gelber Group this is for Americans only, but at least for half the audience over here. Brian Gelber is a market wizard who's a very, very good old school trader, and he runs an old school prop firm, not a retail prop firm like the kind of Apex is, but an old school prop firm where they actually hire you, pay you a salary, let you trade for them. And they're running a contest with $50,000 worth of prizes inside of it. that I would love to have you guys join. That's the link to the contest. If you're a US, that's all you need to be, just a US customer. You can join the contest. If you do well trading, they will interview you and they may hire you. So it's it's a really interesting opportunity. I'm going to put that out there for you guys as a first thing on offer here. Is in case of interest rates, will the market accelerate? This is one of those questions that you never know the answer to, because market anticipating signaling of interest rates, it's already run up in front of it. It's very, very feasible that we could have super great news and everything just tanks as you have profit taking kick in, which very often happens. Remember, FOMC is like a famous rug pull, meaning they run it at the front and then they just drip it below. We'll be able to catch it either way because our indicators are gonna go with the flow. But I'm not gonna guess what's gonna happen, because honestly nobody knows, and nobody really knows where the orders are stacked after this. So we'll leave it be for the time being. Anyways, so that's the Gelber Group. I want everybody to take a look at that. It's a great link. Then I want to put the other link, of course, our friends at Apex. This is the absolute last day to get discounts. And I'm going to talk about the cheapest one that I bought. I bought a couple of 25s, which were like less than $35. And to me, these are the greatest bargains in the world. So we're gonna try to trade these towards target and towards funding. And I'm going to explain to you after the FOMC announcement. We'll just take a little time here, because we'll have a little time in between him coming on board. It's a 2 o'clock statement, which we'll read very, very carefully. And then after that, we'll do that. So everybody be sure right now to lock up the Apex accounts. You buy them now, you can inventory them, and you'll be able to use them at a very, very cheap price. So really, really good idea. Anything else on your mind? Like what are you guys thinking about? Any other questions you have for me? Happy to answer. We got a little bit of time before the release of the data. We'll go through some of the data that I wanted to share with you. So here's financial juice. We'll see what's going on over here. A lot of geopolitical news going on in the markets. Might as well review some of the stuff that's been happening, because even though it may not be initially impacting stuff, there's just so much volatility going, and this to me speaks to this little asset. So story number one, of course, yesterday was the revolt in Venezuela against what seemingly is a completely stolen election by Maduro. Where that goes, nobody knows. Obviously, I think if the army abandons him, he's gone. Whether the people have the will and the power to continue protesting for more than 24 hours, we'll have to see. But I think he's basically counting on time right now to let people just vent out, and everybody goes back to their grouchy old self, and things return. But if we do have a revolution in Venezuela, it's a massive, massive event for the whole continent, and actually very interesting for us, because obviously, if Venezuela falls, it's a proxy state for Russia, it's a proxy state for Iran. It's very, very bad news geopolitically for us. If it falls, we can convert it back to a normal capitalist society. It will be a huge boon. Venezuela has more oil than Saudi Arabia. It's not good oil. It's what's called heavy crude, not sweet light crude. But nevertheless, they got more oil than Saudi Arabia. And in a place where energy is always going to be in demand, it'd be wonderful if we could rehabilitate Latin America and redo it. India, what's going on in India? That's one story I don't know about. Is there something going on in India? Or you just posted India as like, you want me to talk about India. The second big story in the last 24 hours was the just stone cold taking out of Hamas operatives and Iranian Revolutionary Guard leaders in Lebanon. And what did they take out the Iranian guy? I think also in Lebanon. I think it was all in Lebanon. So they took out Hamas's number 2 and the RGC's number 2. The Israelis did. This is definitely a flex by the Israeli military forces, because they were able to find those guys and isolate them and just blow them to smithereens. We'll see where that goes. It's clearly an answer to this horrific maiming and killing of 11 innocent kids in Israel, all of them of Arabic origin, the Druze kids, who are very much a part of Israeli society, and well justified. But the point is, we'll have to see what geopolitically that goes. It should be really interesting. But can I put the Fed transmission? Yeah, I'll have. You mean it's not going to go on until 2:30? So Bernard, we'll try. I have it on. We'll see if we can rebroadcast it through. I still haven't been able to master. This is one of the things that I'm kind of trying to figure out how to do through StreamYard, is how we can retransmit it. But yeah, well, if nothing else, I'll listen and I'll comment on what he's going to say. So we'll be watching the Fed. What else? So we have Venezuela, Israeli Middle East tensions with Hezbollah. And then last but not least, I don't know if you guys have been following the US election over the last week, but what an unbelievable turnaround it's been in the US political landscape. And everything, of course, can change again. But 2 weeks ago, when former President Trump was nearly assassinated, there wasn't a single person in America who thought that he was going to lose. And now, there are many, I think the majority of the people think he will. It's been just a complete whirlwind, with Kamala Harris taking over the essentially the leadership role in the DNC and getting an enormous amount of popular press. The Trump campaign stumbled horribly with their VP pick, who seems to be out of some, freak movie in terms of his political views generally, and his physical demeanor specifically. I mean, he looks like a creep, talks like a creep. And I speak as somebody who's probably going to vote Republican this year. And, I still find him absolutely disgusting. It was a massive mistake on their part. And more importantly, I don't know this, but I'm going to handicap this. She's going to make a VP announcement. She's going to make the VP announcement in Philadelphia. That would, this is going to be on Tuesday. That would seem to me that she's going to pick Josh Shapiro, who's literally the single best politician on the Democratic side. If in a perfect world, he'd be top of the ticket. But the fact that she's going to pick him is a super interesting pick. It's a very smart, confident pick in my mind, because he's a super good politician. He's Jewish. The whole Jewish vote in the U.S., which is 70% Democratic, has shifted to probably 50 after the enormous amount of anti-Semitism that has been propagated through the Democratic Party. All of it, by the way, completely, encouraged by Kamala Harris herself, who's trying to really play hard to the Arab vote in Minnesota and Michigan. But what's fascinating, I admire the move chess-wise, because putting Josh Shapiro on the ticket, if they do that, brings back a very, very important constituency in the Democratic Party, because it brings the Jews back to Pennsylvania, which means they're probably going to win Pennsylvania. But without Pennsylvania, they can't win Pennsylvania. And at the same time, because she still is pandering to the pro-Hamas wing of the Democratic Party, they're going to forgive her for putting Josh Shapiro on. So she's going to blunt, the Jewish resentment, at the same time not really hurt herself, I think, with that, because they were not motivated to vote for Biden, but they are motivated to vote for her in Minnesota and Michigan. So I think, props to them if they're going to make that move. It'll be really interesting. And I think that will put her actually ahead. And that's going to be just absolutely fascinating, because I don't think there was a single person here who thought that Trump was going to be losing. All right, we're almost to the 2 o'clock show. Where's our Fed announcement? Where's my announcement here? Here we go. 7 seconds left. Obviously, expecting no change in the rates. Let's see if there's any material change in the language. Sometimes they're late, so they don't, they don't respond. We can look at the charts to see if we get any kind of reaction. Looks like everything is frozen. So we haven't had a release yet. I'm just going to watch the charts to tell you when the news is released, because it's going to be definitely, I think, a bigger knee-jerk reaction than this. No change. Everybody's saying no change. So market is kind of quiet. Let's see what still nothing here. Stocks rose in the round. Let's do forex live. Let's see if they have anything. They're usually very fast on the. Okay, here's the keeps rates unchanged. I guess not much of a response. So recent indicators suggest economic activity has continued to expand, seeks to achieve maximum blah 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 in support of its goals. Committee decided to maintain target range blah blah blah. Concerning adjustment, they will carefully encounter that committee does not expect it will be appropriate to reduce target until it has gained greater confidence. So really, no change in the language. Let's see if this is negative for the. Well, not much. Just kind of a tiny little bit knee-jerk reaction. Gold is feeling the most because obviously, if interest rates stay the same, that's negative gold. Really, not much enlightenment here. In assessing will continue monitor implications. Committee will be prepared to adjust the stance when as appropriate if risk emerges. It could impede the attainment of that blah blah blah. This looks like it's absolutely no change in language. Huh. Let's see what's anything on Twitter for analysis. Federal Committee statement. But here's the change. So recent indicators suggest moderated, so a little bit moved up, but remain somewhat elevated. So it's a tiny, modest shift to the dovish side. And the committee is attentive to the inflation, to the risks to both sides of the demand. Really nothing. There's just not much here that you could say, oh, they're definitely gonna. Basically they're neither gonna cut. It looks like they may stay stationary in September, which will be interesting. To me, this is a negative. Here's how I would judge it. Now, this is just me interpreting, so of course we're gonna have to wait for the price action. But my view is, unless they clearly communicate they're gonna cut, you have to sort of assume that's a negative. You have to assume the worst, that they're not going to cut. If they're not going to cut, that's a big surprise to the market because it's already pricing in. Let's see the Fed funds rate. Fed funds futures. We have a quote on them. So this is for December. Where's the odds? Let me see if I can find it. A little bit lower, just slightly lower. But essentially unchanged. Nobody's thinking about anything. She seems really quiet. I guess everybody's going to wait for Powell. But my point is that you have to assume that unless he sort of really suggests that they're going to cut, you have to assume that there's a strong chance they may not. That I think could be negative. We'll have to see. But I'm kind of tempted to sort of this 550 level in the S&P, right? So this is 560, 550. I think what's the high on this thing? Somewhere around there. This could be the distribution, and then we could go right back towards the 5,500 to the downside. I'm sort of very I'm tilting more negative than positive on all of this, but we'll have to wait, see what he's got to say. In the meantime, let me explain what we have going here, what the indicators are doing, how I have kind of modified my trading, and give you sort of some thoughts about passing the prop tests and everything else that that we have going. Oops, sorry, that we have going here. So we're sort of extending, I guess, the market, trying to go higher. I don't know. I don't have any particular vibe on it. Would I short this for fun? Yes, I will. Where's my trade of eight? I'm gonna go sell this just for fun around the highs on a. Oh shit! I'm on the wrong contract. Okay, get out. Never mind. Ah, fuck. Never mind. Sorry. This is what I want to do. This all goes to my idea. Let's play this a little bit because I'm going to explain to you what I've been doing in terms of size and structure that I think is going to resonate with a lot of you guys. So what I'm trying to do right now is I'm literally effing around and I'm trying to sell the highs. You're looking at S&P at 5565. The green line is the day's highs. I'm kind of thinking the market is full of shit. It really isn't going to take it's already rallied a lot, and there's very little reason to think that this is a super bullish text, but maybe it is. But if it goes higher, so be it. I'm going to get stopped out, and here's what I'm going to do. Just again, I'm doing this in tiny batches. So we will, we'll see if my little attempts here to make it work. But as I'm doing this, watch what I'm doing because I'm going to explain to you the methodology that I'm trading with, which hopefully is going to resolve itself. Come on, baby, come on. All right, we'll close this out and recover the trades here a little bit. See, and I could have recovered the whole thing. So before I even begin kind of telling you why I'm doing a lot of this stuff, let's go to the Apex website. And this is true of almost every single prop firm, but I'm going to use Apex because they're our buddies. They sponsor the show. Here's the link to them, by the way. Not just a great way of getting a discount. But what I want to do, and they're going to probably hate me for telling you this, but this is sort of my view. I want you to look at the two things that are important: profit goal and trailing threshold, right? Basically your target and your stop. At 25, it's an even money trade. You got to make 1,500, lose 1,500. Here it gets a little bit worse. You got to make 3,000 against 2,500. Here it gets much worse. You only have 2,700 of budget and you got to make 4,200. Here it gets progressively worse, 2 to 1. You got to make 6 and can only lose 3. And it just keeps going, it gets much worse as we get along until we get to like 300,000, where it's really 3 to 1, right? It's basically 3 to 1. You got to make 20, effectively you're 21, you only got 7,000. So you have to make $3 for every dollar of risk. Whereas on the original one, I only need to make $1 for every dollar of risk, right? Give me a yes if you guys see that ratio. If you guys see that ratio, right? Let me see if you guys sort of understand the basic risk payouts of the structure, right? I don't see anybody responding. Are you guys seeing it? Okay. So if that's the case, and the best odds are the cheapest account, right? First of all, it's the cheapest account. And of course, with everybody wants to get the biggest amount of money. But my argument to you is that it's better to buy $10,000, $25,000 accounts and try to make them than to buy one $250,000 account to try to make it. Which is why the discounts are really, really great. You can just harvest all this stuff very, very cheaply. So why is it better? And then what do you do with it once it is better? Well, you have a $1,500 account, right? What you do is you can trade instead of full mini trades. You can trade in micro trades because all you need to do is make $1,500, right? let's imagine that you set $100 target per day, which is, a lot. This is an account I started today. I'm already at $500, and this is an account I started this morning, and I'm already at 158. Right. So it's not unreasonable to think you could make $100 a day. 15 days gets you done. Right. I'm thinking you could probably do $200 a day, 7-8 days you're funded. But here's the thing: you make that $200 a day just trading micro accounts. And you do it in two interesting ways that I started to do. First, I started to trade ultra small, right? So I started with a micro account. Second, I started to expand my stops and targets to give myself a lot more room. So I'm both going smaller and wider. So on the S&P, I'm now trading 4 and 4, right? Before I was trading 1 point to win, 2 points to lose, which sounds good and does make a lot of money, when you're on a roll. But remember, every time you get hit back, it's 2 points against you. Where it really, really hurts you, and this is the secret sauce to my recipe, is if I get stopped out, like you see me over here on a micro account, I can easily go two sides, right? I can go large size, and I'm right back, not just to break even, but to full win, right? Now, if I lose, it's a -3. -3 is, completely acceptable. I can make that in 3 trades back. Not really, really horrible, right? But if I am a 1 to 2 risk reward ratio, so I'm betting 10, risking 20, and I double up and I lose, it's a -6. It's a much deeper hole to dig myself out of. So I have a lot more flexibility to go what I call trade cycle, which means if the first trade doesn't work, and you see me, I was just really screwing around. This wasn't even a setup for me. But the same idea is that I always assume that my first trade is not necessarily going to be the winner, but I'll have a reasonable chance to turn the trade cycle into a win trade cycle if I give myself 2 chances, maybe even 3 chances, because I'm trading so small, right? Even at 3 chances, my net exposure is going to be, so $20 times 7, that's $140. And I have this is on an S&P contract, and I have $1,500 worth of budget. So there's 2 things that happens when you start trading small. You're virtually assured of not. First of all, I'm actually curious. Let's do this first poll of the day. First poll of the day. This is, and be honest, you bastards, because I've done this 1,000 times too. So let's start this. Hang on. Have you ever blown an account in one day? I've done like 5 accounts in one day. So let's start this poll. Be honest, answer this question. So my point is that when we're trading this much, I'm trading $25,000 account that I can trade. I get 10 of them. I'm trading micro contracts. I'm trading multiple attempts at a trade. All of that, none of that will ever blow me out as long as I do that. Because what causes the blowout? 5 large, 10 large, just 5 points against you, account is crushed, right? If you had a big run up and then you go 5 large, it just has to go like 1,000 against you, and you're crushed. Sometimes you take a trade and just boom, before it even it even completes, you're stopped out because you have so much large size and so little room on the downside to work with, right? So I see people are actually being honest here. So more than 50% of people have blown out in one day. This is a way to kind of to indulge your worst impulses, but control your worst behavior. Yes, I can take what I call F around trades. I can do interesting ideas that are not part of my setup, but I'm not going to hurt I'm not going to get to a point where I'm going to get blown out, right? Especially if I'm doing a 1-2 opportunity. So the argument that I'm making is smaller is beautiful, right? That smaller is better, at least in the way that we can approach this. Now we're going to weave this in with we got about 15 minutes before Jerome comes in, so we have plenty of time. Weave this in with a strategy that we're trading constantly, in the room here, and let's take a look at what we're doing here. So, so is that clear? First of all, is everybody kind of clear on what's going on in terms of my thought pattern? Fred is saying he's never blown an account in his life. Fred, that means you're really not living. Okay, that means you're just not living. You really need to loosen up a little bit. So give me a yes. Are you guys feeling me on this? Are you guys hearing what I'm saying? So a couple of components just to make it clear. Smaller account, tiny sizes, wider stops and targets, even money trades. Not 1 to 2, but 1 to 1. Even money trades, so that we can tilt the odds. We don't have to work too hard to tilt the odds in our favor, right? Still no guarantees, but still not bad. So we have all of those components with us. Let's take a look at what we can do with the strategy that we have. This is our 1-bar scalp strategy that I developed. I spoke about this on Tuesday. I'm going to review it a little bit for everybody who may be new in the group with me here, who's trading with me right now. So what this does is it shows you price levels and the the slopiness of slope, right? The whole idea here is this shows you a change differential from the prior 8-period movement. So 8 periods ago, this is an 8-period moving average, and we're using an 8-period slope variation. And the point is, if the slope is getting sharper to the upward side, +4 or more to the upward side, it generates a label, tells you it's a possible buy. If the slope is getting 4 or more than -4 to the negative side, it's telling you the slope is starting to come down, and it generates a label to the sell side, right? And of course, the shifts in momentum from positive to negative are the most interesting. The phase change conditions, like in nature, everything, phase change is the greatest thing. And of course, turns in the market are the most interesting, lucrative points of view. So how do we trade this? There's a whole variety of ways we can approach this indicator. I'll give you the absolute plain vanilla version, and then we can do a little bit more variations on the theme. So the plain vanilla version is what we're looking for is change phase transition that is confirmed. Confirmed means the following. You need the following sequence to make it work. You need, for the long side, a red and 2 greens, red, green, green. The second green is your entry trade if it's higher than the first green. So you got to see, this is 550 against 47. They're clearly a nice high. Boom, boom, boom. And as you can see, it's a beautiful, beautiful trade, right? That's the sort of plain vanilla thing. And in reverse, we're looking for two greens against the red. So no, sorry, not 2 greens. We're looking for a green, red, red on the opposite side. So the short trade would be green, red, red. Same idea. The second red has got to be lower than the first red. And this indeed is. We're short here and falls like a stone, right? So that works pretty well. I mean, it works better than 50%, but not exactly 80%. If it did, it'd be wonderful. But it works like, between 50 and 60% of the time, which is as good as we're ever going to get in anything that we're doing as far as the indicator goes. Now, what's interesting about that is that we can do a couple of interesting variations on the theme. I'm going to show you a contrarian approach that's also interesting to look at, which is the following. The contrarian approach is the following. I have a whole bunch of greens, right? Let's say 2 or 3 greens, meaning we have an upward trend. And then suddenly I have a red label. However, and this is what's the interesting part, the red label is higher than the prior green label. You see this is 60 against 56, right? So it's this interplay of like, we have a sell-off, but the sell-off is coming from higher levels. Contrary-wise, that is actually a super great buy. But this is, if you get a higher red and you're getting sold off, it's a bargain basement buy. You buy this at a bargain basement, you got a great entry. You see how this really, really, really works very well, right? Boom, super duper strong, right? Now, does it always work? No, not always, because here you have a composition here where you have, well, the problem here, I will say this. this isn't a legitimate example here, but you have a higher red here, right, against a green structure. But what you see here is that the greens are actually declining. They're not. This is an upward trend in greens. This is a downward trend in greens. So this higher red is not something that I'll be buying just because of that condition. However, I'm trying to see if I have any examples. Well, here's an example where, again, you would also have a higher red. No, this is really not a higher red. It's 63 against 63. This is good. It's really keeping me out of idiotic trouble. This is where you probably marginally. This is where this contrarian indicator would fail you. You have a whole bunch of greens. You have a tiny bit higher red, not a really lot. 45 against 46. You're a buyer here, and it just keeps going down, right? So the contrarian indicator doesn't always work by any means, but when it does work, it really creates some really nice low risk opportunities for you. Generally, though, you don't need to do much, but just simply look at phase transitions. Green, red, reds, downward, red, green, greens, upward. You can just trade that continuously. Now, where I weave in my little what are you guys asking me? How to trade with 100 euros? I have no idea, my friend. Where I weave in my little magic is, imagine the setup doesn't work, right? So I'm short this, right? 4, 39, whatever. Let's say I get stopped out. Like it's 39. It's this does hit, but let's say I get stopped out, right? I'm stopped out. I'm on a small contract. I'm on a micro contract. I get a flip phase transition here. I can double up. I can go 2 contracts instead of 1. So this trade, instead of just simply being a loser, turns into a full. This whole trade cycle becomes a +1 winner, because I'm, the second phase transition carries me to profit, and I'm still trading very, very small. Now, multiply this by 4 instruments, lots and lots of phase transitions throughout the day, and you're in the middle of a lot of opportunities with small sizes, large samples, and generally, hopefully, net positive, conditions, right? Right now, we're just flipping around. Like gold, for example, is just going green, red, green, red, green, red. We're not really getting any phase transition. We're also obviously never want to do anything in front of Mr. Powell's conversation, because he's going to, once he takes the microphone, everything could flip around. But this kind of a cycle, just sort of like, let me just sort of run you through how it would have traded today from the market open, right? So we have the market open. We have 2 greens, 1 red, 1 phase transition, boom, +4. 2 phase transition, boom, +8. No phase transitions here. 3 phase transition, you're stopped. You definitely stopped out over here, right? So this would be, you're over here, you're stopped out, right? Now you're looking for the next phase transition, and this is where you really have to have faith, control, and obviously, the other thing is, I wouldn't be doing this in the middle of lunch hour. This is where nothing happens, and you're going to get a whole bunch of false signals. But let's imagine I got a false signal here. I got stopped out. I have red 2 greens. I'm long here. I got stopped out. Now I have a third cycle. I have a green, red, reds. After I'm stopped out, I'm flat. I can take a look at it. Now I go 4 large. Again, I'm doing micros, and the whole thing turns positive. So now I'm resolved 1, resolved 2, resolved 3. I'm +3 for the day, right? And now we flip around over here, and then I'm +4 for the day, because I have two greens and red. So before Jerome even talks, I'm +4 for the day in the S&P. Similar type of situation in NASDAQ, so on and so forth. So let's imagine it's a $20 bet, right? +4 is an 8. All I'm doing is just $20 bets. But with NASDAQ, it's going to be $40 bets. With the Dow, they're really tiny. It's like $10 bets. You could probably double up the size on the Dow. And with gold, it's $20 bets. So I'm just sort of basically saying an average of a $20 bet. 4 bets on the S&P. Let's say 4 bets on NASDAQ. If everything shakes out, you're talking about $160 Remember, we talked about $200 a day, 7 days gets you to funding without much stress, without any kind of a slide back that puts you into stop out territory. You're right there. That's it. Don't need to do much. You don't need to stress much, and you could do very well. Now, the ultimate layer, which we're going to do when I come back from my summer vacation in September, is once we're going to concatenate, we're going to connect all of these small accounts into a trade copier. So we're going to trade small across a wide plane, maybe 5 or 10 accounts, and that is how we're going to achieve. We're going to achieve our leverage not through over leveraging our account, but by just widening out our basket of trades using trade copiers. So I'm going to master that technology, and then we'll trade it with you guys when we come back. That's sort of like the overarching theme for us to trade into the fall. And this is the reason, so many of my guys are passing, because I think they're using a lot of these techniques. Can the one bar phase transition differentiate between a continuation versus no? Sorry. How do you know it's a continuation? You assume it's a continuation, right, Pam? And sometimes it's a reversal. So like that's the market. If you knew ahead of time that you always had continuation, I literally would have a winning trade every single time. The whole very essence of risk is that you don't know. You just have a probabilistically higher than 50-50 chance, right? That's why if I'm going 1, 2, 4, if I think my chances are more than 50-50, by the third time, it's kind of like it's a difference between conditional probability and independent probability. So what everybody teaches you is that every trade is independent of the market. It's complete bullshit. Empirically, you can see it's not true that prices are dependent upon past prices. People are cognizant of what happened just a minute ago or 2 minutes ago, and they're reacting, to that price action. So that very model that every roll of the dice is independent is full of shit. So once you understand that it's conditional, then the odds don't become 50-50. They become like 97-3, because you just multiply 0.5 by 0.5 by 0.5, and that becomes like a 97% probability of success in terms of that way. Now, it's neither fully conditional nor completely independent. I wish it was 97% of the time. It's neither one of those things, but it's more towards that way versus this way, which is kind of really interesting, which is why this stuff works. But you need, it works. You need to have small size and small structures and good, good payout ratios, like a 1-to-1 risk reward ratio on your prop account to make it viable. I'm trying to just pull myself here to let me see if I can get a little bit more real estate here. So it's a lot of, it's very messy because we've got four charts on here. Jerome's going to come on. Let me see. Where is the Fed? This is the Fed. God knows if it can. I don't know if you guys. Are you guys hearing really, really obnoxious, loud music? Yes. No. Anybody hearing any music? Give me a yes or no in the room, please. Before my brain goes dead. Okay, you are hearing it. Okay, so if you're hearing the obnoxious loud music, that means when Jerome starts speaking, we'll be able to hear him a little bit. So we'll go back and forth. Once he gets up there. Also, you know what I'm going to do? I'm going to put this on my other screen so I can just sneak a peek. I see you guys, and I'm going to sneak a peek at all my charts because this is going to give me much faster directionality. So here's what's going on right now. Now, this is a stupid thing to do, but I'm going to do it. It's really a stupid thing to do. This is a 2 red, green 2 reds, but the second red is higher than the first red. We're not getting a higher, lower high. This isn't a decline. This is a climb, right? This is a climb. On the other hand, we got a red, green on NASDAQ. Let's pull the trigger. Let's pull the trigger, and because we're going to trade small. So I'm going to go MNQ. I'm going to buy market. and it's a 2020 stop target. So I'm basically targeting 94. My stop is 54. Ooh, it's really moving. It's really moving. Okay. You know what? We'll take it. Super fast. We'll take it. That was $30. I don't look a gift horse in the mouth when I can, but it's just a good example of like, okay, I had a what the hell? How did we not? Wasn't there a double? There was a double thing and it just disappeared. Oh, I know what happened, guys. Ooh, this was made me very lucky. So this candle was double green, but it ended flat, so it kind of disappeared because it only stays if it's confirmed. But I got lucky. I pulled the trigger, and ahead of Jerome, they just started to ramp the trade. So I don't look a gift horse in the mouth. I took it, but as Yogi Berra said, I'd rather be lucky than good. So this is what happened. We were originally showing a second tile here, but it disappeared at the very last second. By that time, I had already gone long, so I got my trade. I took it out. Thank you very much. So it's that's how it plays sometimes. Okay, he's talking. Let's see what he's going to say. I'm keeping an eye on the charts on the other chart. So if anything moves that triggers a signal of ours, I will let you know. Markets are definitely liking what he's got to say. We have a double green here, but I already took my trade, so I'm gonna not trade the space transition. Although it was a legitimate trade, you could have bought at 15, went up to 25. By the way, to get this indicator, you just simply have to join our group. I'm going to send you the link over here in the description. That's a discount link, and you could do it and come in. All right, let's go here. I made him loud, so you guys can tell me if he's loud. Just say you can hear him well. No, you're not hearing it now. You guys don't hear it at all. Oh, I'm sorry. Why was it? Nobody's hearing this. Oh, oh, that sucks. I wish. Oh, that sucks. I'm sorry, guys. So um, I will just I'll summarize it. So he's saying they're gonna cut rates until they feel inflation is 2%. He says more good data will strengthen their confidence. They don't want to. They don't want to restart inflation and cut too soon. So they're going to look at the balance of risks. They're not committing to anything. So if the economy stays at this rate, they're not going to cut at all. But if inflation drops sharply, they'll cut. Market is starting to sell off on this because it doesn't sound like he's really ready to cut in September. You know, the very hard part about this is you never know what he really means until the Q&A comes in. Like if I'm looking right now, I would sell it. You know, I'm just going to sell a little bit here on the ES. Um, on the assumption that he's not sounding very, very hawkish. I mean, very, very dovish. So I'm just doing a fundamental trade here, reading this up, and you see the target hits, right? We're starting to get back. This is just me reading what he's saying, and we started to short. Now we're getting some questions. She's asking, are you going to cut rates in September? Let's see what he's going to say. We've made no decision about this September. We're moving there. Are we? He's saying basically, is the whole inflationary picture going to be positive for us in order for us to make the decision? And we're going to assess that in the next meeting in September. We're getting closer, but not quite at the point yet. So that's not 100% commitment. It's kind of like a 75% commitment, which is why the market is starting to weaken up a little bit. He's saying, is cut in September expected? Okay, he just said rate cut could be on the table if inflation comes down and we're basically at this state. But if inflation is disappointing, they would wait. Remember, so the market has already assumed that it's going to be a rate cut, and he's kind of saying maybe, maybe not. He's saying recent data has been giving him confidence that they're going to cut. Gold is acting pretty well, guys. So gold is acting like it really believes that he's going to cut, right? Market is starting to act a little bit better. So, we're going to let it be. I'm waiting for a red candle. Um, he's basically, she's asking him, "Are you going to do 3 rate cuts?" He says, we're not even thinking about one, much less three. Um, it sounds like he's 75% there, but not 100%. It sounds like if the CPI does not cooperate in September, they may not. They may hold off. The market doesn't care. The market seems to be convinced that they're going to run it. Now, what's interesting to me about the market is we're at pretty much session highs, right? 575 on this. Let's watch how it trades because I'm actually looking from everything he's saying and from the fact that we've already had a huge run up on a just really fundamental base because I don't have any technical setups on this. I'm looking to fade this, but I like to wait until I have some signal of exhaustion. Like we're hitting this whole high here. Now, there's two ways you could possibly trade this. You could say, okay, I'm just going to guess this is a top, and if it stops me out, I'm going to just get larger at a bigger point, which is not a bad idea given how high we are. So, maybe I'll sell market over here. And if it runs me over, I'm at small size, I'll get larger at bigger levels. Now, I'm basically just kind of going against the trend here because my view is that fundamentally this is not like a slam dunk deal. But the market is clearly disagreeing with me, so we will honor the market and watch the price action. But if I'm going to fade the market, at least I'm going to try and do it as intelligently as possible, right? So I need to come back down. This is going to come back down. What's my target on this? 72 is my target. We are at 73. All right, I'm going to take it early. Good enough. I mean, good enough for government work. And it's just that, this is a good example of not getting excited. You have a view, you think this is, kind of a bullshit move. It's hitting all the high levels. I'm going to wait until absolute peak, and then I'm not going to get greedy. I'm going to take it back because they can still take it higher, right? They can still take it higher, which we really don't have. Technically, I don't have a single signal here that things are correcting at all, right? I don't have a red. I don't have anything over here. The slope is actually just monstrously, piling up. If I was smart, I'd get long, but I'm just uncomfortable getting long here because it feels to me like this is I'm buying the top tick, which maybe not. We're clearly now session highs. Let me show you the cool thing about Trade Evade that's very nice is where's MES? Oh, let me just add. I don't think I have MES here on this one. MES, you select. So this is MES, right? This is the small one. Where's the high? Oh, here's the green line. See the green line? That's the day's high. So we're trading through day's high, right? Which is fine. And if you want to be, you want to be short. You want to be short around this particular level because that is the day's high. I'm going to give myself, how much time do I have? We ran through it. I'm going to go a little higher. All right, I'm gonna sell this right now. Again, small. If I get run over, I will regroup myself above the 80s. I don't hear him saying anything so significantly bullish, but I may be misreading him. We'll see. But I'm trying to position myself, I think, on more of a corrective move here. Let's see where we go. I'm going to try to move this over here. Just, if we flush down, I'll just try to get myself done quickly. If not, I'll redouble my efforts a little bit later. The key thing I want you to understand is just that I'm trading small. I'm not trading stressed. I have a plan I have a backup plan. I have a backup plan for a backup plan. These are the things that I'm kind of doing right now against essentially, by the way, nothing going on as far as my technical indicators go, right? And what do I? Am I getting corrected here? Is this? Am I close to the correction? I'm like 75.25 bid. Let's see if we can get that done. There we go, and we're done. And again, I sold the highs. The thing I love about Trade Evade is like it visually tells you where the highs are, so you could position yourself. And now I'm just going to relax. Let's we made a couple of really good trades. I'm up like $100 since I started trading with you guys on nothing, on the tiniest $20 trades, and that's fine. That's where I want to be. It's kind of a stress-free trading structure for me. So hopefully you guys, you guys like this, and hope you guys like seeing it. Let me just see what what Jerome. Let's read. He's saying that Jolt's. He's saying the employment data is even below 219 data in terms of demand, although there's no firing, so we're sort of in a static distribution. Is that good for Jerome? He's saying that labor is normalizing, and that gives him. Um, Steve is asking him, are the rates going to be just one at a time, or is it going to be a process? Market continues to go higher, and Nasdaq is giving us a triple, like a third buy label move here. So they continue to love it. Remember, I told you gold continues to be strong. Gold likes this too. So the market generally likes this. I'm just not chasing this move. Uh, uh, he's saying that we're in a very unusual situation where even though we raised rates, employment data went up. They're very happy about that, and they're trying to figure. They basically want to maintain the economy as is and not do anything to harm it one way or the other. So that's why they're so hesitant to really move one way or the other on the price action. I mean, honestly, it feels like it doesn't matter what he's saying. The market just wants to go higher. He's saying that inflation is actually coming down at a faster rate than last year. This is all very bullish. Like honestly, all these signals are actually good signals. I'm just look at gold. Gold is really liking this. Um, really pushing through high levels on gold. I'm just fundamentally not feeling his bullishness, but clearly I'm wrong. So if I'm wrong and I'm not doing anything, there's nothing for me to do because I don't have a signal. The signals I didn't take the signals before, so I'm just going to sit tight. I'm going to see if we have any corrective signals. I want to see if we have any kind of topping out signals. Then I'll be happy to maybe fade them out a little bit. Was definitely stretched hard here. I was tempted to kind of short gold right over here too because it's definitely correcting a little bit. And it's probably, the fact that gold is correcting as the first one is probably a good chance that S&P is going to correct. So let's get short S&P. So I'm going to start sell market. This is my first short, and I am very, very close to the highs here, right? So again, a relatively decent location position after we've established highs. If you're going to blow through the highs, I'll wait and regroup myself once that happens. But let's just see how it plays out. It came out a little bit early on the highs, but it's fine. Again, let's get a little bit shorter here. See if I can take it down. Come on. Oh, I took myself out essentially for 3 or 4 ticks here because I was a little bit mispositioned. I came in just a little bit too early. It ran up through me. It's probably going to top out over here. I'm pretty sure it's going to top out over here, but I'll give it a minute or so. I was using gold as kind of my leader here. Gold was the first one to correct, so I was like, oh, I think it looks like everything else is going to correct. And you can see that the NASDAQ is starting to correct. This is starting to correct a little bit. Let me see a first red candle here. I won't even have a red tile for quite a while here. So I'm really trading out of the stratosphere. Another thing that's interesting here is that we can see that the Dow is the weakest of all, I believe, right? I think the Dow has Dow is only up 1%, and to me that's a good signal that if I'm going to short something, let me find the Dow. Let's short the Dow. Where's Dow here? It's really falling, right? Hang on. Boy, man, I haven't looked at Dow. Okay, let's short the Dow. Now, the Dow, this is a very, very small trade. And basically, oops, where am I? I don't have it on the ladder. Let me put it on the ladder here, guys. All right, you know what? Exit. Exited around +8. Let me put it on the ladder here for you guys. So the thought about the Dow here, kind of just give you an idea of why I'm doing this versus that, is let's put the Dow over here. Select. Yeah. Okay. Right. Let me just make sure. Is this right? 78. Yeah. Okay. We're right there. Okay. This is the right thing. So why I shorted the Dow versus, let's say, the S&P or NASDAQ. NASDAQ is, of course, first of all, super volatile, right? You snooze, you lose. The Dow is the weakest of all. So if it's going to fall, it's going to be likely going to have the best continuity to the fall side. So here, I saw there was a short. I got the 10 points out of it, which is fine. And I'll keep watching it as the weakling of the three. We're still just rallying up, and I'm just sort of still not joining the huge move here. The move is massive. It's 3% in the NASDAQ, 2% in the S&P. Really, really huge. Might even go to the 5,600 level. At which point, by the way, that's going to be a massive. I'm going to absolutely love shorting that level because naturally there's going to be some overflow here. I don't know if we're going to be able to reach that. That's quite a stretch already, given everything we've done. But you see how if you want to be on the opposite side of the market, you pick the weakest one because you always want to kick the weakest guy down. That's what trading is all about. It's not a game of morality. It's a game of efficacy. I saw that gold, which was the strongest move to the upside, started to correct the first, and that was my signal that maybe everything else is kind of starting to correct. And that's basically what I'm doing. I'm not really trading my indicator right now. I'm just reading the price action, which I think could be a lot of fun for you guys. Now, could I go more over here? Yes, but I started talking, so I really didn't put myself into a good position. Now I don't want to be chasing this to the downside. The trade was over here, which is where I had it. It came down like 30, 40 points, and this is going to come down a little bit more. And the S&P is also rolling over, right? It's also rolling over. But we don't have, right now, we're sort of outside of the highs. We're into the corrective mode, and now it's no man's land. It can either drop like a stone or come back up for a double top formation. Since we don't know, we don't have a really good, strong feel. We don't have any continuity signals from the slope side. We'll just sit here and wait. We made a nice amount of money without having to do anything else. Are you guys hearing me? I don't see anybody commenting. Are you guys following what I'm doing? Is it making sense to you guys? I want to make sure you guys are all alive there and that are all trading with me. Talk to me, babies. I feel very, very yes, no? Nobody is. Are you guys hearing me? I don't see anybody posting. Okay, thank you. Thanks, Cheryl. I get very insecure when nobody's posting and nobody's asking questions. But are you guys following me? Anybody? I'm actually curious. Anybody shorted with me on some of these pops? Are you guys just watching? Anybody trading the long side? Because we obviously had a very, very strong long move here. That's kind of working. Let's see what he's got to say. If there's anything else. So no, the majority did not want to raise rates. He said. So he's saying that his policy is in fact restrictive, that it's working with a lag, and that yes, they're going to have a lag on the downside as well. He said it's going to take a little while for it to work its way through the economy. She's asking, are you worried that because of the lag, you're going to hit into a recession? Says we don't want to go too soon or too late. All right, I'm gonna do one more. I'm waiting for this candle to close. It did close, so I'll mark it. Again, trying to shorting the Dow. He says the economy is very much normal. It's not any kind of a danger of slowdown, and that continues to be the case. He's asking, are they worried about the SOM rule? I'm going to close this out for you just a little bit more, a little bit pippage. You can see that, ran this up from about 450 to about 550 with you guys on literally micro contracts, right? Zero stress. If we look at the P&L today, look at my drawdowns. Look at my drawdowns. This is where I want to be. I want to live in a low stress world. That this is just me. I absolutely, this isn't the prescription for everybody. There are people there are guys in my room that'll bang $3,000 in an hour because they'll just take size and just ride size. I'm not of that physical makeup. Like I have, basically what happens to me is I take 3,000 and it'll just go against me and I'll just get pissed and I'll do another one. And it just goes down. I go down the rabbit hole of burning accounts and resetting them. It's very unproductive. I just realized that's not who I am. I don't, you have to know how you trade. This is like a really important lesson, I think, in who you are personally, and you can never change who you are. So that's why I offer lots of different approaches, because it's not necessarily that I want you to trade like me. And Kay very often wants me to trade really large, and I find myself just completely doing the wrong thing for everybody by doing that. So stay true to yourself. Know how you trade. I am perfectly happy making $20 at a time, 50, 5 to 10 times a day, instead of making 2,000 at a time once or twice a day. It all depends on where you are on the rhythm. I'm happy to lever that up through a trade copier eventually. But on an individual level, I like trading small. I have a Pomeranian. I drive a Mini. I'm a big guy who likes small things. We have a huge house and I'm in Jersey with you guys in, and I have a tiny apartment in New York. I love my apartment 10 times more than I love our huge house. So it all depends on who you are and what you trade. So I'm just sort of showing you my approach. The good thing about my approach, I think, is that it's very, very, very even keel towards maintaining the account, running the account, and growing the account. You don't get fast quickly, but you get fat. You don't get rich quickly, but you get rich durably doing it this way. So just just some thoughts on the P&Ls, on the structures. Feel free to take a look at this. Just my own thoughts on all of this, right? In terms of how I'm trading. So everybody, can certainly use this 100 different ways. As I said, let me give you the links again. Please get into that contest with Brian Gelber if you like. Let's do a little bit of an Apex discount for everybody. And last but not least, you want my indicator. Here's a discount to the room. This thing is gold. I mean, whether you trade like a mouse like I do, or you trade like a tiger like half the guys in my room, it's very flexible. It'll make you money both ways. There are guys in my room that would have. I know there are guys in my room. Oh, what did I just do here? What did we just do here? Sorry. I know there are guys in my room that looked at this chart and just loaded the F up, like 10 contracts on this and just ran this up, 10 contracts on this and just ran this up, okay? And would have been $4,000, boom, 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 you're funded, which is one way of trading it. And then there's me who's just, cautiously watching and basically doing phase transitions on small sizes and just running it slowly, taking 6, 7, 8, even 10 days to complete the account, which is fine, because the flip side of it is that I'm not constantly resetting. I'm not constantly in this set of vibration. I'm not constantly yelling and screaming at the fact that that I've over levered yet again and took a large trade that just took me out by one tick and then ran. By the way, pretty nice corrective trade over here, right? This is a big NASDAQ move. Now, how do we trade this? So let's just kind of look at this. NASDAQ is a massively retraceable instrument. So you hear 21 at 60, it's a 40-point retrace. It's almost inevitable it's going to go 20 points against you. So it's very, very difficult to pull the trigger on a short here, because you basically you can be short here right on the trade and still get stopped out at a 20-point gun. So here I'm a little bit cautious, right? I didn't pull the trigger because it was just, I knew it was going to retrace and probably stop me out on a relatively short stop. Now you could make a long stop, like a 50-point stop, but then it's a huge monetary stop relative to where you're at. It's like a $100 stop on a small contract, $1,000 stop on a big one, anywhere in between. It's large stops which do not in any way, shape guarantee this is a top. It's only like a viable thing to do if you're 1,000% convinced this is the top for the day. We're going to turn. Everybody is just completely loaded up the truck now. It's 3 o'clock. Usually when he leaves, the market completely changes its tune. Let's see what he's. Oh, he's just basically saying nobody's gonna tell me what to do as far as politics go. That's actually very true. He gives the big FU to both parties, which I like about him. But you see what I'm saying? Like, you have to be very comfortable with the notion that this is the absolute top. I don't give a shit. I'm going to short here because it's going to turn, and I will withstand this retrace because I'm looking for a waterfall to the downside. It's a different kind of trade. It's a very viable kind of trade, just not a trade I do, because I'm not going to be doing trades for 100 points. I'm happy to do trades for 20 points. And if it's a 20-point trade, is it worthwhile for me to take this trade? No, it wasn't really worthwhile. And now I have to watch the trade. Generally, I'm not a huge fan of trading NASDAQ because of its massive volatility. So I trade it occasionally, but it's always it's always a handful, much more of a handful than the trading the S&P, right? So the S&P also did a big, large move, and obviously not worth it. Now we're having it's really not even a phase transition, right? It's sort of it's a green-red transition, but we are getting our first signal. Now what's interesting here, and this is where it's really a chess game because it's FOMC, so it's very, very hard to say. So what we're looking at here is a red label, only a first one. We don't even have the two greens ones, so it's really not even a phase transition. Sort of one phase transition from red to green. It's materially higher than the prior green one, right? So the correction is at a much higher level, and the general idea here is because it's at a high. Oh, it just disappeared, so we don't even have a signal. But if it stays here, the general rule of thumb is it's more a buy than it is a sell, right? Well, it actually is a buy period, right? Because it just turned into a buy. So no trades here. We do have a sell on our weak one, but here this is interesting. So this was the weakest one of all, right? I missed the trade, so no sense chasing it here. But if we sold 64s, it went all the way down to like 47. This was a very, very quick 20-point move. But again, this is a good example of where the weakest of all, if you're gonna short against the trend, you short on the weakest of all, right? Like, if nothing else, this was the most interesting lesson of the day today, is that all of our success essentially came from shorting the Dow, because the Dow was the weakest of all. Anytime we showed weakness, we just got shorted. And it worked. And even here, this sell signal, which is higher than the green one, right? But it is a phase transition. Two greens and a red actually works to the downside, not to the upside. So even on a straight up indicator basis, this was a signal that worked. Here is the S&P now showing us a sell signal. So here we are. This is where it gets interesting, because traditionally I should be thinking of this as a buy. However, because it's FOMC, because we had a massive run up, because it's like 20 points above the thing, it actually could be a corrective move. Like, I'm not looking to fade this move and buy. I actually think this probably is better sell than it is a buy. But either way, I'm kind of late to the game, so I'm not going to take this trade. But it just gives you lots of flexibility to think about all these things in the heat of the moment, especially against the backdrop of the Fed. Like, this was, it's really now it's really turning a good sell. And this, by the way, this is the other thing I was going to say to you. So the big sharp move here, right, certainly was too early to chase, but the second sell was probably a really good trade. Like, we had the big move, retrace, and then the true sell coming off. And now I think we're going to get probably a sell rally, move to the downside as the market starts to liquidate into the final hour. And remember, I said to you, if you were 100% convinced this was a top, which I told you, right? And you had a 50-point stop, you probably would be looking pretty good right now. Now, you're still not out of the woods yet. You're really not even profitable on the NASDAQ. But if this was the top, this thing is going to crack to the downside, and you could take it to the downside, right? So lots of, nothing else. FOMC gives us lots of interesting stuff to look at, to try to understand where the patterns are coming from, what's going on, and how the market is sort of, thinking about it. Is he almost finished? Let me see if Jerome is almost finished. See if he's saying anything. So honestly, he is kind of at the end of this meeting. They wore him down, and he's kind of admitting, yeah, we're going to probably cut in September. That's why you're seeing the market hold up the bid so well, and kind of trade. But remember, we really, we've run up quite a lot against this conversation. So now it's not even a matter of news. We've already digested the news. Now it's a matter of the reaction. And it could very well be that even if the market sort of walks away with the idea that, yeah, he's going to cut in September, he's kind of confirmed it to us after they worn him down, we still could be looking for a little bit of a correction, right? Like right now, we have a green double red on the Dow, which is a decent sell trade. Let me see if I want to take it. Oh, where am I? All right, so. All right, you know what? I'm going to take it. Yeah, I'm taking a super quick exit because I'm not sure that it's not going to retrace against me. But okay, I took it. If I trust my setup fully, and it does work. My setup, fully working, it does work. Would have worked fully on the thing. Still, half a loaf better than none. Especially as I'm closing up the day. Day's been really, really good for me. I'm not vibrating with stress. I'm taking really small positions, and I'm nickel and diming myself to profit, which is perfectly okay. So now, any questions? I'm open to you guys. We've got 10, 15 minutes. Happy to chill out. Hope you guys really liked the FOMC trade. Hope it was fun. We definitely made good money. I mean, I don't think I had a losing trade. I literally did not have a losing trade today. Maybe I did have one. I think I had one. Let's take a look. Did I have it? Let's take a look. If we go to custom range and we go from, what do we start? Like 1343 to now, I had 2 losing trades. Okay. 9 of 11. That is damn good, guys. 81 to 18. That's damn good. I'll take that. Not bad, right? And I think one of them was just me simply hitting the big ES instead of the small ES by mistake and stopping myself out right away. So it's really, really 10-1. But okay, 9-2. Not bad. Not bad. We'll take it. You guys good? Any questions? Everybody seems to be okay. I'm happy to hang out with you guys. Oof, I got disconnected. Let's reconnect. But otherwise, we're going to wrap it up. It's been a really good day. 9 out of 2 ain't bad, as they say. Thank you, guys. I will see you next week. We're definitely trading next week, and then after that, it's going to be touch and go. I'll let you know. I'll be in Europe, so we'll see if we can do a little bit more lives. If not, we'll definitely come back at the end of August and do take it to the next level. We're going to trade multiple accounts on Trade Copier at small sizes to give you a really great battle plan for passing the props and making money. All right, my friends. Everybody have a great, great day. I will see everybody next week. Take care. I'm going to be in Vegas in case you guys are going to be at the Money Show. I'll be there Thursday, Friday. So come watch me. I'd love to see you. Thanks a lot.